Good morning. This is Tom Alexander. It is Sunday, July 24th. It is about 10:13 a.m. Eastern Time on Sunday morning in beautiful Charleston, South Carolina. Hope you're all having a wonderful weekend. We're heading into a week with a lot of exogenous stuff. We have earnings, some big earnings coming out, and some of the major components of the NDX and certainly the SPX. The market is going to be driven this week by the reaction to both those earnings as well as the FOMC policy announcement on Wednesday. We have some pretty good levels to keep an eye on, but the market is most certainly going to react to both these earnings and this rate announcement on Wednesday, and then actually what the market is going to do. The reaction is going to be the perception of what's going on, not necessarily what actually happens, as is always the case, trying to guess which way the market moves in the case of good earnings, bad earnings, or a rate above or below what was expected. It's a guess. So we're always dependent on what the market participants are doing. That's why we follow price action, because price action is truth. It's what we're trading, and it determines whether or not we make or lose money when we take a trade or we make an investment. So let's take a look at the charts. If it will let me, yes. Okay, here are the four primary US trading indices, the cash markets: the S&P, the Russell, the Dow, and the NDX. There are a few points here, actually several points to be made. You can see the Russell. Let's just start, not the Russell, the NDX. Let's start with the NDX. This is a level. The levels on the chart have been on the chart for weeks. You can go back and check previous reports. There's no magic to this. I simply follow auction market concepts, price action, and typical paths of development. So the NDX has reached into an upper critical key reference area that includes this volume node here, this balance area. This balance area was formed following this ramp higher, and then we had this furious drop into this low. And since then, we have been making a series of higher highs and higher lows, the latest of which was on Friday. We followed through a little bit to the upside following Thursday, and then fell back into the close. What can we make of that? It's too early to tell. You just don't know. It's not surprising to see pushback from this level. Ideally, this area will hold in here. The general guideline when you are in a strong trend, in this case an uptrend, is you're looking for previous extremes close by, meaning the previous day's low or the second day back low. So this is a sort of a broad range. This was so vertical. There is the close of Thursday, there's the close of Friday, and there's the close of Wednesday included in this downside key reference area. Now, we could stay in this general range for the next couple of days prior to the FOMC. So just that's the possibilities here are quite numerous. The obvious most important level as we headed into cash trading on Monday to the upside, and that's more obvious than a level to the downside, and this is true in all the indices, is going to be Friday's cash high. Now, it is a little bit of a concern that the NDX is the only one of the four primary US trading indices to have reached its upper key reference area at this point in time. I'll also point out in the SPX, and I did this in last week's report. If you want to go back and review that, the links in the written report. As of Thursday's close, we had, in terms of percentage, we had rallied equal to the second greatest rally in magnitude since the January top. and that was off this low on the 23rd. Now, if we were to reach up into the reach or exceed the magnitude of the greatest rally since the January top, that would put us right around this 4,100 level that is at the lower cusp of this volume node in the S&P. Now, there's no magic to that. I just point this out as pointed out as a key reference. Typically, bear markets have rallies greater in magnitude than 12 or 13% somewhere along the way. Now, we can certainly still have that, and it doesn't begin until 3,000. Who knows? I don't. There's no way to know that. But I just put this in here as a frame of reference. I found it very interesting. I found two things interesting. The 9.7% was right at this 4,000 magical round number. And then the 12.7% was right at 4,100. That also coincides with this volume node. Now, to the downside, in the immediate downside as we head into the new week, the cash session, this is going to be, and I put this in the chart, in the report, this area in here, you would ideally like to see hold. If we get below this area, you don't know where it stops. We're just guessing. And the same holds true, if the S&P and the NDX make a significant move, the Russell and the Dow are going to participate to one degree or another in that direction. So there's no point in parsing out, trying to super fine tune levels. The obvious levels in all four to the upside will be Monday's cash high. Friday's cash high. If Friday's cash high is approached by even one, you want to be paying attention and looking to see if the others are following through. If not, then that may be a sell signal, and it may be that we're, again, there are numerous possibilities that we're going to stay in balance for the next few days. But that's something I would be watching for. I'm more confident in that upside level than I am anything to the downside at this point as we head into Globex this evening and then the cash market on Monday. Okay. I'm going to skip ahead. Here's the profile view. This is the July auction. Now you can see the July auction has traded up into this conviction here, quote unquote, single prints. There's nothing magical about single prints except that it denotes conviction, and it's the concept of conviction that is more important than single prints. Single prints are simply a vestige of price action. It's important to understand price action, and price action through the lens of how an auction market develops. Okay, let's split this out, and let's split this out. And here's what we have. Now, again, the development possibilities here are numerous. We could stay in a general range for the next couple of days between roughly Friday's cash session high and last Wednesday's cash session low until Wednesday's rate announcement. We could eventually find ourselves in a range between Friday's cash session high and the low back here around 3,700. I don't remember what day that was, a week or so ago. And we could also ramp higher into this high volume node. So from a development perspective, the paths are numerous. That's just the way it is. We'll have to fine tune and adjust this in real time, which of course we will be doing live in the live trade room. Okay, let's take a look at our price breadth work. And, I said in last weekend's report that we were overdue to have, this was, I think, last Friday, and Friday week ago, that we were overdue to have multiple up breadth days. And indeed, we had 5 consecutive days of positive breadth, which is the most we've had since the January top. And then, of course, this past Friday, we had negative breadth, not that negative. Now, I mentioned in the report that it will be something to watch this week. If we do have some sort of selling squall where breadth goes, and if breadth reaches a negative 2000 level, that will be an important event, and it will be one of these if-then type events. But if we have a selling squall and a big down day, and breadth closes at negative 2000 or worse, then what follows that is going to be really important in terms of the likelihood of this particular rally being over and we're going to revisit new lows or not. And that can only be determined if it happens. And then we will monitor at that point forward, again, in real time to assess the probabilities of what's next. Okay, VIX continues to drop, which is bullish. This is something else that we will be monitoring closely in the next week. The lower VIX goes, the higher the probability this market continues to rally and is rallying. It's sort of a chicken and egg type of thing, but you certainly want to be paying attention to VIX. Okay, thank you very much. If you enjoyed this video, you found value, please like it. You can subscribe to my channel. You can hit the notification bell. You'll get notified when I post new things. Enjoy the rest of your weekend. I'll speak with you soon.